Welcome to this week's version of Nickels and Dimes, our weekly video series. Well, we've talked quite recently about the risk-off trade. If you're investing in the equity markets or the crypto markets or even the bond market, you are very likely down or have lost money in 2022. So it's the risk-off trade. That continues. Investor sentiment is quite negative. So I wanted to talk about something positive today, and that was the best investments the last 10 years. Hopefully you were in some of these investments. And then what may be the right or the most ideal investments over the next 10 years. Well, that's anyone's educated guess or guess, and no one has that crystal ball. But let's dive into what the best investments were the last 10 years. Well, to no one's surprise, Tesla was the best stock, over 13,000%. If you bought and held from April 30th of this year, let's call it rolling back 10 years. Nvidia around 5,000%. Netflix, although it's gotten quite hammered as most big tech stocks and the Nasdaq, most recently. But Netflix was up 1,500%. AMD, Advanced Micro Devices, Amazon, everyone's favorite place to shop these days online. Domino's Pizza, if you're a fast food pizza fan and invested in the stock, you were up, again, if you bought and hold, 800%. Microsoft, Apple, and Google. And how did the S&P do? The S&P was up around 200%. What a very good run. And by comparison, gold, by looking at the GLD, it's a exchange traded fund, you're up a very modest 9.3%. So again, incredible returns if you were in the right investment. Some people totally missed the boat. Some people got some of the upside. Some people, got a significant amount of upside. So the key, at least the last 10 years, were investing in the S&P 500. If you invested in gold on a purchasing power basis, you actually probably lost money if you bought and hold. But again, if you invest in the big tech stocks like Amazon, like Google, like Apple, you obviously did very well. My question to you is, which was the best investment over the last 10 years if you bought and hold? And the answer may actually surprise you, or maybe it doesn't if you're a big fan of this asset class. The answer is Bitcoin. If you can believe it or not, Bitcoin returned a whopping 752.9 or 753,000% from $5 around April 30th of 2012 to now. I know it's pulled back most recently by the time you've seen this video to around 37,000. In fact, the time of recording this video was hovering around 32,000. But at the end of the day, what an amazing return. Now, look, the reality is this. What worked the last 10 years may not work the next 10 years. In other words, the investments that were really good the last 10, there's no guarantee that they're going to be the best investments going forward. And you had a time where you had historically low interest rates. I mean, the Fed was dropping interest rates, and obviously printing money with quantitative easing. So there's some companies that benefited from that. There's some asset classes that benefited from that. And one could argue, for example, Bitcoin was one of them. So I wanted to share with you just our thoughts because, as I'd mentioned, the past does not equal the future. So what worked before may not necessarily work going forward. We had a very strong bull market, as I'd mentioned, primarily driven by low interest rates and quantitative easing, a fancy way to say printing of money. The concern we have now is, traditionally speaking, when the market has a very strong run up, as we've seen from the mid to late 20s, it tends to have a down to go nowhere market for many decades. You've seen the period from 1929 to 1952, after that big run up, we had a very big consolidation and let's call it a go nowhere market for a long time. Past 1952, if you're looking here, it's quite clear. After, again, a big market run up, we had a very long period of consolidation. From 1969 to 1979, after a big market run up, the market effectively went nowhere. And most of us remember what is famously termed as the lost decade. From 2000 to 2013, the market effectively went nowhere in that 13-year period of time. And again, by the market, I mean the S&P 500. Notably, again, prior was that big run up from 79 to around 2000. And the question is, what asset classes will be the next winners? Will it be gold? Because gold has underperformed for 10 years on a relative basis. Will the market, will the S&P over the next 10 years do what it did in the past, where we had, after a big run up, we had a go nowhere market for a number of decades? Will the same thing happen again? We often talk about the market doesn't necessarily repeat itself, but it often rhymes. So there's a reasonable chance that the market, again, if the past is any indicator of what the future may be, the market may likely go nowhere. So the key here really is to identify what opportunities that you think, or that one thinks will be the most ideal asset classes or investment. And again, it very likely may not be buy and hold. We've seen interest rates come up. The bond market's not attractive anymore, particularly if inflation is more consistent than the Federal Reserve says, whether it's 9% or 10%. If you think about it, if, for example, you're investing in bonds and earning 2 to 3 to 4%, if inflation's 8, 9, 10% on a real term basis, you're likely losing money from, on a purchasing power basis. All that to say is, we would say just get a second opinion, whether it's with us or another firm. This is our website. You can click on our go on our website and click on the Contact Us tab up here on the upper right and get a second opinion. We're happy to give you our thoughts on the market. Things are challenging, and they may continue to get more challenging. And note, you may hear some concerns about a slowing economic time, where we just had a negative, if you will, economic report, and we're likely heading into a recession. The market, if you look at the equity markets, they're forecasting it. Reach out to us. You could check us out on our website. Check out that second opinion tab, or you could email me at cnichols@nicholswealth.com. Thank you again for watching. Bye-bye.